Hello and welcome back to Infinite Banking Step by Step. This is part 4 in the series. If you missed the first few videos, please go back and start at the beginning. In the last video, we looked at the conventional wisdom's answer to the problem, which is really no solution at all. It's more or less just ignoring the problem. In this video, we're going to look at the infinite banking approach to the problem. As a quick refresher, the problem is the volume of interest that is being paid to third parties on a regular basis, not the rate of interest, but the volume, the total amount of interest. Now, the infinite banking concept is just the idea that you can recapture the interest that you are paying to these third parties and instead pay it to an entity that you own and control. After all, in the current world, the best case scenario is that you're paying some corporation that doesn't care about you, or they might even hate you. Now, if you're someone who already pays cash for everything, you may be thinking, Luke, I don't have this problem. I don't pay an interest rate. This video is for other people. Now, I used to think this way. My wife and I were big Dave Ramsey fans for a period of time, and we did pay cash for everything. However, I eventually came to realize that there's always an interest rate no matter whether you're paying cash or taking a loan. Every purchase that you make has an interest rate, period. Of course, it's more obvious when you take a loan. When you borrow money, it's in the contract. You know the rate of interest up front, and it's very explicit. But if you pay cash, the interest rate is still there. It's just slightly better hidden. The rate of interest when you pay cash is the rate of interest you could have earned with that money if you hadn't spent it. In other words, if you have your money in a savings account paying 1%, 3%, whatever percent, you're not just giving up the money you spend when you access that savings account and pay for something. You're also giving up all the future interest earnings of that account. In other words, if you have your money in a savings account that pays, say, 3%, and you take out a large portion to buy something, you also lost the interest that money could have earned. It's not in the savings account once you pull it out, so it can't earn interest for you. The cost of buying something in cash is the interest you don't get to make with your money. You've compromised the growth of that savings account value forever. So given that there is always an interest rate, let's talk about how you can benefit from that instead of just paying the interest to someone else. Speaking broadly, infinite banking is a way that you can get the major benefits of paying cash and the major benefits of financing things at the same time. So what the heck does that mean? Well, let's focus on the high points right now, drill into the details later, but for now, just remember that we're accessing the cash value of a whole life insurance policy here. So let's pretend you're buying a car for $50,000. From the dealership's point of view, this is a cash transaction. You pay $50,000 and immediately receive the title to the car. Now, if you were to finance that car, the lender would be able to specify how much insurance you carried on the car and what type of coverage, generally full coverage, on that car. But since you got the title, you've already paid off the car in the one payment, you get to choose that. You could carry less insurance. You could carry only liability insurance. You get to make a lot of choices here that you wouldn't get to make in a financing situation. If at some point you want to sell this car that you purchased, a private sale would also be much easier. You have the title, You don't need to go to a bank to ask for their approval, and you don't have to negotiate anything with them. There's no credit check on this. It doesn't matter what your credit score is. It has no impact on your ability to use the infinite banking strategy. There's no asking permission in this scenario either. You don't go to the bank and say, well, I make this much money every year and I can afford this much payment every month. You're not asking. You tell the insurance company you'd like a policy loan for $50,000, and they say, okay, and send it to you. They are contractually required to send you the policy loan, no matter what your income is, whether or not you currently have income, or any other questions they might want to ask in a bank. So, those were things that were all true of a cash purchase as well. But what about the infinite banking strategy is similar to a regular loan? Let's talk about that next. Well, there is an interest rate on policy loans against your life insurance policy, and you should make payments on that loan over time. Of course, it's also critically different from a traditional loan, so let's talk about those differences as well. Yes, there's an interest rate, but it's not based on your credit score, like we discussed before. It's applied to everyone who has the same type of policy with the same company in the same way, and the rate is generally quite low. Now, I can't speak for all life insurance agencies, but if you're working with Perfect Spiral Capital, you're getting a whole life policy with a mutually owned life insurance company. A mutually owned company means that it is owned by the people that own their products. So by buying a whole life insurance policy, you're also becoming a part owner of that life insurance company. So, yes, there's an interest rate, but you're paying it to a company that you own. Because you own this company, when you pay the interest rate, you are helping them to make money. When that company makes money, because you're an owner, they pay a dividend to you. Imagine if you were a majority shareholder in Citibank or Bank of America, you would expect a dividend. And if you were getting a loan, you'd probably go to them for that loan, right? Same principle applies here. This dividend that the company will pay to you if they make money in a given year is paid to you regardless of whether or not you are accessing loans against your cash value in your policy. Here's one of the biggest differences. The loan is unstructured. That means that you can make a monthly payment in the same amount every month or not. You can make large random dollar amount payments on your time at your leisure or not. Ultimately, you are in full control of when to pay and how much to pay. If you lose your job or have some other major catastrophe in your life, just skip payments until you're back on your feet. That's flexibility that you don't have with a traditional loan. And yes, you can skip payments for years if you need to. Speaking of the worst case scenario, remember that you already have the title to the car. The life insurance company can't show up and take the car. The collateral on the loan is not the car. The thing securing the loan is not the car. It's the death benefit on the life insurance policy that secures the loan. The last major point for now is that when you make a repayment on this policy loan, the amount you have available to borrow against actually goes back up. So the money isn't gone forever like it is when you take money out of a savings or checking account to go buy something. It becomes available again once you make the repayment. So as you can see, there's a whole host of benefits to using an infinite banking style financing strategy instead of the traditional financing strategies. Now, establishing a life insurance policy like this has a cost. That's something we need to talk about and we'll get into as the course progresses. But for now, I just want to highlight why it's significant to have this kind of system in place. The most important thing to understand right now is that this is a strategy that enables you to fund the major purchases and investments throughout your life. It's not an end of life strategy, it's a all throughout your life strategy. In the next video, we're going to talk about what type of life insurance policy has these characteristics and how it might be built for your benefit. You'll see a link to that next video appearing on the screen shortly. Thank you so much for watching, and I'll see you in the next video.